ETFs continue to fly high in terms of where the market is trending, especially around Bitcoin. Today, we'll dive into what are some of the best options. Is it ETF, direct exposure, all that? We'll break it down for you. My name is Paul Barrow. Welcome back into TechPath. All right, a couple of things I want to do today is we'll have a guest on. We're going to be breaking down how and if an ETF is the best route for you. I do want to thank our sponsor on that, and that is Caleb & Brown. If you guys are looking at more of a white glove service around your crypto exchanges, this was one of the options out there. So make sure and visit calebandbrown.com. I want to jump into the first couple of topics here. One, of course, has been the success of the ETFs. And if you look at the number of ETFs that have been out there, the success of them, whether you're looking at BlackRock, you look at Fidelity, and even now to a certain extent, VanEck and even ARK, there's been a lot of exposure of institutional capital coming in. Here's Mike Novogratz talking about how Galaxy thinks institutional capital, a boom is here, and they're coming for crypto. A couple of points he kind of hits on. Demographic, primarily composed of baby boomers, increasingly gaining access to Bitcoin through spot Bitcoin ETFs. This is one option. And they also emphasize the transformative impact of providing easy access to Bitcoin. So I think that is another thing that plays into it. And then you look at just the impact on long-term holders. This is also, I think, going to play into the strategy of how you're really kind of holding bags in the future. Last up he hits on here says Novogratz is optimistic about the eventual normalization of crypto services, including banking for crypto companies in the U.S. Now, globally, many people have a lot more direct access. And I think the key there with that has been direct access. And are you doing it the right way? So we're going to have a guest on here in a minute to kind of break that down. The next tweet here was just a breakdown on just how much exposure is happening out there. BlackRock now holding 125,000 Bitcoin, up about 1,891 from yesterday. So again, more and more growth in this space. I want to welcome in Jake Boyle from Caleb & Brown to kind of talk about this. Jake, how's it going?
Very well, thanks. How are you?
So Jake, kind of comparing when you look at what's happening in the ETF space versus maybe I jump on, I get my crypto from an exchange like Coinbase or Binance on the global stage. Tell me about where Caleb & Brown plays into this factor. How do you guys work with investors, and is it more of a white glove service? Can you share more?
Absolutely. So we started the business in 2016 as a cryptocurrency brokerage. Think of brokerage you might have for whether you're purchasing real estate, commodities, anything of that sort. The model's existed for centuries now, probably. With that in mind, we thought the cryptocurrency space is so nascent, so full of risk and uncertainty. It's 24/7. It makes so much more sense to have a brokerage model where you've got the white glove service, a dedicated broker, all the overkill security features. It makes so much more sense to have a brokerage model for cryptocurrency than it does for the traditional industries. So our position in the space is really ensuring that whether it's a retail investor or an institutional investor, you have a safe place where you know that you can buy, sell, swap, and custody your assets. And you can go to the office or get a coffee with your broker, get that real human experience. And in light of recent ETF announcements and the success in that field, we have felt that that has supported and validated our business model as we see that the industry is moving to becoming more of a legitimized space. It's here to stay.
Yeah, what I have found in talking with a lot of investors and just, people that are curious about crypto, we do a little webinar, seminar type session every couple of weeks, usually high net worth individuals. And they're always starting to expand beyond an ETF. They're asking about Ethereum. They want to learn about swaps on DeFi. They don't necessarily know a lot about it. So I think in many cases, they kind of result into going over to YouTube or just trying to figure out what some of the influencers are doing in terms of sharing projects, et cetera. For you guys, do you guys actually do things like that where you would do some DeFi trades, or maybe you would do something around things that are a little bit more risky other than just say Bitcoin and Ethereum?
Absolutely. So on our end, the general consensus is we want to have institutional liquidity and services purpose built to support everything from a retail client investing $1,000 or $2,000. The idea is that we have full-time traders. We invest heavily on our back end. We don't depend on a single liquidity source. So when someone utilizes our platform or gives their broker a phone call, we're not subject to 10 different assets on a trading book and you've just got to automate the whole process. We've had clients who have come through and they might have originally been interested in Bitcoin and may have even been sparked by the ETF news, which gives some natural optimism. From there, they start researching Ethereum, then they get into DeFi, and now they're calling up their broker saying, hey, here are 6 different altcoins. I need to wire you some funds to get you to purchase them. And then I got to get you to teach me how to use a wallet. And I want to custody some with you guys. So I've definitely found that the ETF has opened up this rabbit hole of crypto. And it's bringing a lot of inflow of clients who they want their hand to be held. They want the extra security, the better trade execution. But they've come originally from the ETF news.
What do you think about self-custody for people who are brand new to crypto? Because that's one of the top questions I get all the time is, should I go ahead and get a Ledger wallet or a Tangent wallet and, try to hold my own keys? Is that something that you even recommend to, to first-time crypto investors? What has been the case for you guys?
No, it's a great question. And it's a question we're asked every single day since 2016. At the end of the day, our attitude is security before everything else. We want to educate clients. We always want to work with clients to ensure that whether they're using ourselves as their custody solution or a third party, or maybe they're taking complete self-custody, whatever the case is, we just want them to have the facts, have the clear information. We'll test your wallet for you. We can test it 100 times over for all that we care. We just don't want a situation where we're sending you Bitcoin to a wallet that you lose the keys for a week later.
Right.
We do encourage self-custody, but we encourage self-custody as only as much as the individual investor is comfortable with that solution. And we always say to clients, look, we have this repertoire behind us. If you want to use that, there's no cost. You can call me 1,000,000 times a week. It won't cost you a cent. And hey, if I'm going to send it to your own wallet, at least let me test it out thoroughly first and put some security metrics in place for you.
I think that's the thing that now that we have an ETF that is, especially here in the United States, that's regulated, one, you get a lot of people who look at it and says, okay, this is a mature asset class now. We think that it's coming. Now, granted, there are some people that look against that. And that's the thing I want to ask you. This was a tweet by the European Central Bank, and it says, Bitcoin failed to become a digital, centralized digital currency. They go on, they're kind of trashing Bitcoin basically, but then they get fact checked, which I thought was brilliant. And it says, well, necessarily is not the case. It's not used by criminals. We have this tit for tat all the time here in the U.S. with our lawmakers, how they try to make it such a bad thing when in reality it's not the case. Euro is losing its purchasing power against Bitcoin. So you probably get investors and people, high net worth individuals come in and they say, hey, I'm looking at Forex. I'm looking at some other opportunities out here in the open markets. Maybe I'm even shifting around some real estate funds. And you get those kind of things. What has been the case for you guys in terms of, are you finding more people saying, hey, this is a mature asset class and I want to be a part of it now?
No, that's a really good question. I think we're always going to have these headlines, right? And we were flooded with it post FTX, post Celsius. Mm-hmm. We saw the whole entire market when Bitcoin was 20K. Everyone is hammering it down into the ground. It's the end of the world. Now that Bitcoin is doing quite well, and it's certainly showing that it's here to stay, a lot of these naysayers are still wanting to condemn it, and it'll just be for different reasons now.
Yeah.
And we don't really tend to argue with that. Like we really want everyone to be able to do their own research and form their own opinions on the subject. Now, there are arguments for Bitcoin. There are arguments you can raise against Bitcoin, just like any other asset in the world. What we find is every time a client engages with us, we're not there to sell them the dream on BTC or GMX, Ethereum, Chainlink, you name it. The idea is to provide factual information, navigate the market together, make strategic decisions, mitigate risk, utilize some more sophisticated functions in trading, so we can ultimately all win together. Now, pretending that Bitcoin is just going to solve every problem in the world and it's only going to go up and it's green candles day in, day out, we're all going to be deluded if we think that's the case. But in the same note, we do need to look at the fundamental problems that some of these assets are solving. And through that process, we can clearly say, hey, a lot of the market is potentially overpriced and maybe isn't that great of a project. But in saying that, there are some really, really sound projects out there and they're here to stay and they're worth learning about.
That brings me to Ethereum. Right now we've got a lot of people speculating whether or not, Ethereum is going to actually get an ETF. Here was Coinbase asking the SEC to approve Grayscale's Ethereum spot ETF. Would Ethereum be one like Bitcoin to where it's looked at maybe on the global stage as, all right, this asset has come of age now. ETH is now mainstream. We're going to see a lot more. And when you look at people coming and asking you guys questions about which one should I invest in, ETH, Bitcoin, other altcoins out there, what has been the interest around Ethereum?
Yeah, you're definitely correct in the idea that Ethereum it's making itself into that Bitcoin territory. It's the second most tenured billion-dollar cryptocurrency asset, and it's positioned itself by a mile in that sense. I would say that Ethereum on our end, it does get a little more controversy, a little bit more emotional investment than say BTC does. We obviously have the likes of Solana, we've had Cardano, we've had so many projects which have been the next ETH killer. And there's arguments for and against, and we welcome clients to have those discussions. In saying that, we do find the majority of clients that do come to us, they generally have an allocation they've decided. They consider it a high-risk asset in BTC and ETH. And we welcome that. Cryptocurrency is a high-risk asset. That's just a matter of fact. I've been in the space for over a decade, and I can still say that now. And then from that point forward, through Ethereum, we do typically find that they will unlock further understanding of the world of decentralized finance.
Right.
And that will lead to constructing a portfolio that extends beyond just your Bitcoin and Ethereum. But they certainly pair the two in terms of risk exposure.
One that we've watched has been VanEck. They've been on our show before. VanEck now just submitted an updated S1 for their spot ETF on Ethereum. And VanEck is a very, I would say, high-profile company out there that, one, they're big into the future of where Ethereum is going. How would you guys compare to, say, a typical brokerage house like a VanEck? Is it more of a white glove concept, or what? Kind of give me the variations between the two.
Sure. Well, I suppose in their case, they're solving different problems. They're doing a fantastic job, and all ETFs for that matter are doing a fantastic role in getting mainstream adoption, particularly because it's coming from an institutional layer first, and then it's encouraging retail adoption. I would say on our end, we've taken the opposite approach. We've gone for encouraging better retail adoption, safer retail adoption with more sophisticated products. And then through that process, we've attracted more institutional clients. So back in 2016, when we started, all the clients, they were just friends and family and people that we had met throughout our journey in cryptocurrency, as 6 of us who were owning the company at the time. From that point forward, we simply scaled that idea of, hey, if I'm going to help you out like you're my friend or my neighbor, I'm going to make sure that you can engage with this industry with safety, security. We're going to invest in the best operational backend. We're going to customize your security features. You can call me whenever you want, come to our office, you name it. If we invest in our clients like that, then we will welcome more retail investors, and they'll tell their friends. And since then, we've grown to over 30,000 trading customers. So we've taken the approach of let's solve the problem at a retail level and really encourage people to engage with the market in a safe manner. A lot of these larger ETFs and companies behind them, I think that they've taken the approach of let's get mass institutional adoption, and through that we'll get the greatest cash inflow. So ultimately, we both have the same interest of ensuring safe adoption of the industry. It's just different solutions to a broader problem, I'd say.
Okay, so there's been a lot of people talking about the demographics of people who are investing in crypto, because Coinbase puts out reports in terms of growth. We're starting to see movement in Gen X, even in boomers to a certain extent. But for the most part, it has been millennial and Gen Z that are starting to, dabble in these kinds of digital assets. Do you feel like we'll see more and more people coming in from kind of mainstay wealth in the boomer category into this section during this next bull run? What are your thoughts?
Oh, 100%. It's already happening. That's as far as our experience as a business is concerned. Our business model is shaped so it's not so dissimilar to what kind of premium services you'd be used to if you were working throughout the 80s, 90s, early 2000s for that matter. Now, obviously, we're using technology, which is a bit more advanced in those periods of time, but the fundamental idea of having just absolute dedication to customer service, that's what we're sticking with. And I feel that a lot of the industry, in some respects, has neglected customer service. We don't want these 30-day support tickets or robotic, scrappy AI email replies. Sometimes you just want someone to say, hey, here's my WhatsApp. Why don't you just give me a call? We can grab a coffee or grab lunch. So we've actually found that we've had a tremendous inflow of clients outside of the typical cryptocurrency demographic, millennial, new age money. for lack of a better word, the boomer category is certainly eating up a lot of these lower BTC and ETH prices over the last 2 years. That's what we've found for sure.
So with that being the case, is the primary assets the ones they're more interested in, or are you finding they're starting to kind of dip their toes in DeFi or some of the altcoins? What has been kind of the interest level?
Oh, there's I would say that significantly more than 75% of our client base has interest level in the altcoin sector. It's really just a matter of how much they want to commit to the higher risk elements of the crypto ecosystem. The general journey is you sign up, you're interested in Bitcoin and Ethereum, maybe you have one or two alts in mind. We'll publish research. We encourage our audience and our clients to do their own research. We send across channels like your own, which is how we found your channel, through clients recommending it and so forth. And then through that, we find ourselves in a situation where the client's going to start wanting to catch up for lunch, and they'll shock you because they don't want to talk about Bitcoin anymore. They want to talk about optimism in this new layer. They want to talk about Celestia. There's a whole mountain of research out there to conquer. And it's really exciting when a lot of these clients who were only just getting the grasp on how to use their Trezor device or Ledger device a year ago are now using multiple custody solutions. They're using stop limit orders with us. They've got their profit strategy. They're swapping their altcoin directly into pounds for a holiday. It really is an exciting process to see that education and relationship rise.
Yeah, I think the interesting thing to me is when you look at the overall size of the market right now. I mean, we're continuing to see, market caps that start to blow up toward the $2 trillion mark. Likelihood is we're going to see some pretty accelerated numbers here in a short period of time. And if we see the number of investments, especially with the successes of the ETF coming into direct exposure, we could see another really interesting bull market, maybe one that extends a lot further as well. What are your thoughts on the bull market cycle right now? Do you feel like the halvening is kind of the indicator that's going to help roll this in and then the U.S. economy, or is this something more from a global perspective that you guys are looking at?
For sure. The halving event has always been that whole 4-year cycle. We all hear about it after getting into the space for a week or two. And whether it exists, whether it doesn't exist, the reality is that I do believe that it is priced in psychologically to cryptocurrency investors. And as a result of that, these halving events are seen as critical times, and people will buy and strategize to sell according to these timelines. It's a loose guide that people work by. Now, obviously, we've had a choppy few years. We've had a lot of exchanges fall apart. We've had people lose a lot of money through some centralized platforms. And the market is obviously, just like any other high-risk asset class, it's been sold off during the post-COVID era of the economy that we've all experienced. Right. Now, with that being said, the prices we're seeing now are indicative that cryptocurrency is somewhat depegging itself from the normal ties that it would have to other high-risk assets. I mean, BTC is still sitting over $50,000 in spite of a lot of conflict and geopolitical reasons for high-risk assets to be sold off. I think we are in for quite an exciting bull market, and I think that people will be rewarded for holding out for such a devastating bear market.
Yeah, it was devastating. I mean, you look at the chart right here. This kind of shows, this is all the crypto market hitting at 3 trillion. This was back in November of 2021. Everybody remembers that. Bitcoin hit 69. We saw the metaverse tokens kind of explode during that cycle. And then we had several downturns. And then, of course, Bitcoin's low at around 16 or so, and also a low of only 750 billion in terms of market. And many people look at this as the 12th sector, that it's finally mature. It's coming. We see more technology happening, whether it's in the gaming sector, now in AI, decentralized physical infrastructure networks, the DPINs, all those tokens are coming. If you're looking at the market with investors today, are they asking about those things? Like, hey, what about AI tokens? Or what about DPIN tokens? Are they that advanced yet?
Oh, most definitely. A lot of the time, what will happen is clients will start to use our platform and they'll realize you can actually pair any coin with any other coin. We trade hundreds of assets and we don't have the complexities of buy your Ethereum, send it to this wallet, swap it into Tether, send it to this exchange. Clients can send us a wire and buy all of these altcoins immediately. There's no other trades needed or involved. And it saves them a lot of the price gouging and slippage and costs in between. So once clients realize that, they think, oh, well, I can purchase through Caleb and Brown very complicated altcoins with the same degree of professionalism and execution quality as I can simply Bitcoin and Ethereum. So why would I not capitalize on this fairly unique selling point and jump on board and explore that? And what we've also found is we saw in prior bull markets and bear markets that BTC typically leads the pack. Ethereum is often lagging. Ethereum starts to catch up. Eyes get brought onto altcoin, new cash inflow comes to the market, and then everyone starts chasing that 5x, that 10x, and then the altcoins start to get a lot of love. Clients are aware of that. They're picking up on it and they're having those conversations with us. And now their investment thesis is starting to be a little bit more risk on, I would say.
Interesting. All right. This is one to watch for sure, because I'm of the thought that we're going to see a lot more retail action coming into the space, and people that have never invested in some of these projects before coming in maybe for the first time. So definitely one to watch. Hey, it's definitely good to see you, Jake. Thanks so much for stopping in today. We'll definitely leave a link to Caleb and Brown down in the description below, but we appreciate you stepping in.
Thank you so much. I appreciate it. Cheers.
You bet. All right, so you guys, maybe you're not part of the Diamond Circle right now. Make sure and jump in. It's another great place to get additional research and content that we don't sometimes put here on YouTube. So it's a great starter. If you're brand new to the channel, make sure and subscribe right now. So just click that little subscribe button right now. It's very easy. And of course, catch me out there on X, @PaulBaron. We'll catch you next time right here on TechPath.